Morning, Mr. Secretary. Thank you for joining us.
Good to be here, Jerry.
Let me just start off. You just got back from a very interesting trip to Asia. We've been talking a lot about Asia, and I want to come to the domestic story in a minute. But you just got back from a very interesting trip to Asia. You were actually in China the day the plenum ended.
Right after.
You met with President Xi. Can you give us a sense of what you think, how serious the reforms are announced, what's going to happen, and whether or not this really is going to represent a radical change in China's economic structures?
Well, Jerry, I definitely had the sense that they're very serious about economic reform. Whatever issue we were discussing, they understood what they needed to do, moving towards market allocation of resources, moving towards a market-determined exchange rate, opening markets. What I didn't get a good sense of was the sequence or the pace of change. And I suspect that they're looking at several years of change. And obviously, it makes a big difference what order they take things in. I think they know that that they've got to get more market signals into their economy in order to get the growth rate that they need. Now, obviously, the global economy needs for them to do that as well. But I definitely had the sense that they were very serious about the economic reforms.
There's a lot of CEOs from a lot of America's and the world's largest companies in the room. What's your sense of what it will mean for global business, for American business in particular? Is this the kind of opening that they are going to indulge in? Is that really going to open up their markets?
If you take the Shanghai Free Trade Zone, it is one of the initiatives that they announced just a few months ago after our strategic and economic dialogues here in Washington. They have not yet determined all the details of what that is going to entail. If it opens up their financial services markets, that's a big deal. If it opens up, a number of their markets to international competition, they've made the decision to reverse from presuming their markets are closed to presuming they're open. And now the question is what list of things they close. They still have a lot of work to do. They had a big announcement of the Shanghai Free Trade Zone. I think that'll be an early indicator of where they're heading. They have they have domestic needs. They know that the inventory buildup in the state-owned enterprises is a signal that the market is not working, that resource allocation is not working. They know that to maintain a growth rate that's in the sevens is going to require reform. I suspect that they're going to be making the sequence of change and the timing of change what they need to get their economy moving and to do it in a way to smooth the transition, because there will be disruption when market signals as opposed to state decisions are making more of the determinations. They also seem to understand that they need to stimulate demand. Their economy has really been driven by heavy investment for export. In order to have a good sustainable growth rate going forward, they need to have a more consumer demand. And they also need that in order to satisfy the needs of their population at the same time. One of the things that they're talking about is taking some of the profits from the state-owned enterprises and pumping it back into the economy, both through putting money into the government to spend and also dividends to shareholders. So, I don't want to suggest that a week or a month from now we're going to turn around and it will be transformed. But they certainly charted a direction that is consistent with the things that we have very much encouraged them to think about. I suspect that we're going to still be pressing them to move faster, and probably when we see the sequence, we may have made different choices. And we're just going to have to continue to work with them. One thing that really impressed me was how important the U.S. relationship is to them. And, I met with President Xi just a few days after he took over in March, and I was there just a couple of days after the plenum. And it's a lot of work for them to prepare for these kinds of meetings. It was very important to them to have these conversations.
Yeah, to some extent, as you say, you've been pressing China to open its markets. In the last few months, the last couple of years, we've seen, kind of a reversal to some extent in that relationship. China's been said some pretty critical things about the way the US has been running things, in particular over fiscal issues in the last few months. Did you get any? Did you get much from them on that? Much kind of pressure to do something about about getting a fiscal house in order?
Not really. You know, I think that they understand that you know, we went through a noisy political process, but at the end we did what we had told them we would do, which is make sure that we would stand by the full faith and credit of the United States. You know, I think that they are very much curious how the process will unfold. They did ask some questions about how you know, we saw things unfolding.
They're our principal creditor, after all, right?
So it was not with a high degree of anxiety or with a high degree of pressure. It was really it was a very small part of the conversation, and it was more informational. And I was kind of reassuring. I said, you know, I think if you look at the political debate here, you know, leaders on both sides have said that we need to extend the debt limit. We can't go through the kind of process that created so much anxiety in September and October. And, you know, I would say that if Congress could do it sooner rather than later, it would be a good thing for the U.S. and the global economy.